International. We have with us Jonathan Hunt to discuss the Q4 performance. Jonathan, hi, welcome to the show and sorry about the delay. Before we get to the margins which actually stood out this quarter for Syngene, I wanted to just touch upon the US biotech funding scenario. Has that improved on a sequential basis? How was it this quarter?
Oh, great question. Just before I dive into that, pretty good year overall. Quite happy with the top line performance of the last 12 months. Hit a bit of a speed bump in the fourth quarter, and that leads perfectly into your question. What's going on in US biotech versus major pharma? Simplistically, our business serves two client segments. There's the mega cap corporations, the Fortune 500 or so biopharma companies, well-funded, strong balance sheet, strong cash flow. They're really focusing very much on a geopolitical world, what's going on around China rotation, things like the Biosecure Act, a piece of legislation that's coming through in the US. But maybe we'll have time to talk about that later. And then, of course, there's a startup community. So US biotech startups, they live an existence where they're driving their innovation forward or they're fundraising, and they jump between the two with real frequency. It's not uncommon to be running a biotech and have 12, 24 months of cash flow, cash burn, and then you're back to the capital market. So the story really, we had a big peak a couple of years ago of the amount of money that was going into US biotech. That's driven some good growth for us because they spend that money in our sector as we provide support and service to them. And now they're going back to the capital markets. So we had a couple of things going on in our P&L in the fourth quarter. A number of clients, cancellations or delays because they couldn't get their funding through quick enough to spend it with us. And then if you step back and look at a sort of macro measure, we had 23 billion of new funding going into the US market in the fourth quarter of new capital raising. So that's a really healthy bounce back. That augurs well for the year ahead, but it'll be a couple of quarters before they go from raising the money to spending it with us. So that's why my guidance for the year ahead for Syngene is growth, actually stronger growth in the year ahead than we delivered last year, but I think it'll be second half weighted. Hopefully you followed
all right. So you expect a recovery in the US biotech industry to probably, or the startup industry, the US biotech startup industry to probably be in the second half of the fiscal. But
actually,
margins...
Ekta, to be more precise, I'm seeing the bounce back now. It happened in the fourth quarter. It's happening now in fundraising. There's just a deployment lag. It takes them a couple of quarters before they start spending the money that they've raised.
All right. So it'll probably reflect in companies such as yours in the second half of FY25. That point's taken. Margins did very well for you all this quarter, 34%. Was there any one-off? What is the guidance? Is this sustainable?
Yeah. What's the only certainties in life? Death and taxation. So we were fortunate in the fourth quarter. We got a tax rebate back from the tax authorities. It's a tax case that's been going on for a while, so that gave us a boost at the bottom line. I wouldn't predict that for being a recurring event, but we'll see. And then underpinning it, there's some good operational margin improvements. We've been working hard on operational efficiency, supply chain, more productivity, and we're just seeing a little bit of that being an ongoing benefit. But guidance for the year ahead, EBITDA margins pretty much in line with this year, plus or minus a percentage point. And at the PAT level, we think PAT will grow in the single digits in the year ahead.
How much can Zoetis scale up going forward? And what are the other tie-ups that one can expect this year?
Sure. I mean, we're getting into a habit. You ask me the same question each quarter, and I duck it. We never comment on individual clients. But I'll give you a broader comment, because it's why we deployed capital on doing the Stellis Unit 3 acquisition in the year, is we think that there's a need for more capacity. We think there's certainly a need for more capacity in Syngene. The growth we've seen over the last couple of years in our biologics CDMO was pushing us right up against the ceiling of maximum capacity utilization. So that new capacity coming on second half of this year is a platform for growth, probably in revenue terms the year after. This year is just about getting it up to standard and getting it shown to clients. But even within that, the revenue guidance for the year ahead of high single digits to low double digits on a constant currency basis captures that opportunity in the CDMO space, but it's not solely reliant on the Stelis facility coming online.
Okay, well, we ask you every quarter about Zoetis because it's such a huge opportunity for the company. But Jonathan, having said that, I just wanted your thoughts on the US Biosecure Act, because I think you fleetingly mentioned it when you referred to it earlier. How big an opportunity would it be for a company such as Syngene, because we have the US elections coming up?
Sure.
Are you seeing any kind of benefits coming through already?
Yeah. I think the change states this. We've been talking, and you've asked me questions previous quarters about China plus one, supply chain, dual sourcing. I think the Biosecure Act has just taken the temperature up another level. And now what I'm seeing in clients, that's become a board level matter. It's become an audit and risk committee sort of discussion around where in the world do you get your support work? Where do you have your partnerships? And China's done a wonderful job over 20, 30 years building a very large ecosystem in life sciences, in pharmaceuticals and biotechnology. But there's now a question mark that I think is being played out in boardrooms. Do you want all of your eggs in one basket? Can you really, in a geopolitical world that is as it is, have an overexposure? And I think for the first time, I'm starting to see the beginnings of a structural rebalancing and a rotation. It won't all play out in 1 or 2 quarters. I think it's a trend that starts this year, but will run for at least the next 5 years. How is it manifesting in our business? Just more visits. In the last quarter, and I expect throughout the year, that we'll see more people coming, more expressions of interest, more audits, and more engagement. It's not turned into contracts yet, but it's got a different tone.
And finally, just before we let you go, another question for you to duck. Anything that you've spoken to Biocon about with regards to them looking at maybe monetizing some bit of their stake in the company?
Oh, that's a question for them. I mean, my relationship with Biocon's a great one. I mean, wonderful colleagues. We share a campus, and they're a client of mine, and we do great work for them as we do for all of our clients. But I'm sure you'll have somebody from Biocon on with their earnings call. That's the place to ask that question.
All right, Jonathan. Well, it's a standard 2-3 questions that we ask you every quarter in hope of an answer. But thanks very much for joining in and speaking with us. So that's Syngene. The stock is lower by around 0.6%. There was a revenue decline, but the margins did improve. They did have a tax refund this quarter, which aided their numbers as well. Well.